want to start with the reopen trade, because the reopen trade, remember with COVID, guys, and, everything's getting better, and then we had Delta. Then everything was getting better again, then we had Omicron. The reopen trade is really live. You're seeing it in a lot of stocks. A lot of these things are rebounding. Mask mandates are being lifted. This is driven by a lot of stuff. It's not just like, hey, this is a trend right now, we think. I mean, mask mandates are being lifted in California, New Jersey, Connecticut, Delaware, Oregon. They're saying to lift their statewide mask mandates and school mask mandates. I think it's Monday. Last week, when you're looking at COVID cases, there was 727,000. This is 2 weeks ago. Cases reported, and the past week it's down to 365, and now they're saying it's down 62%. So even more than that. ICU patients down. Total ICU occupancy is 79%. Remember, it was 80, 85. Daniel Leonard was like, there's no room, there's no ICUs. Just to let you know, in 2019, pre-COVID, the U.S. total occupancy on average was 75% for ICUs. Remember, if they don't have people in the ICUs, then they're wasting that equipment. But that is usually at 75%. It got up to 85% in some places. But right now it's 79%, which is near the average. So you're seeing a lot of they're easing restrictions everywhere. And even when you look internationally, where England said vaccine pass is no longer needed to get into events, public venues, you have France, Ireland, Netherlands, and even Australia open up their borders finally, and they were really over the top crazy there. If you're on the beach, they had like helicopters come out and just like go after you. You have Italy, Switzerland, also easing, Germany, Belgium, more like LA and New York City, a little bit late to the party. And, it's going to be sad to see the Super Bowl and paying $7,000 to $10,000 a ticket, I bet. And you're going to see tons of people in mask. Everyone has to wear a mask. And by the way, I'm coming out with my Super Bowl prediction, which is a very big deal. Daniel, you know that. It's a very big deal. So I've been doing it for a long time, and it's usually the ultimate guarantee, because whatever I say, just do the opposite. I think at the last 10 years, I lost 8 out of 10. So, and one of those years was because I went to the Eagles. I'm an Eagle fan. So I said, I got to stick with the Eagles, and the Eagles actually won. And then it was 2 years ago with Kansas City. But last year I lost. So I'm going to break it down. Next podcast, go over everything, tell you exactly why, with good fundamentals, everything of why, which team should win, and just do exactly the opposite. It's as close as a guarantee. Close as a guarantee. But anyway, getting back to this, you're seeing travel restrictions easing everywhere, theaters opening up. And I think that's great, Daniel, for airlines especially. You're looking at travel-related stocks, and you're seeing them move. Even if you go down the line to Boeing, you go to Airbnb, the Expedias. There's a lot to be had here, where these companies are still well off their 2019 highs, and everything's really starting to open up. And I think that's I think that's a layup with a lot of these companies. And again, I was early to the party on this, and when I say early, usually means you're wrong, but we're down a little bit on some of these trades, and now they've all come back, but I think there's tons of upside here.
The reopen trade, you're exactly right. The thesis that we've been talking about is finally here, hopefully. These variants are dissipating. That's a good thing. This is all just great news. Hopefully the stock market reflects that, and you can see higher prices as they should. We've talked about this a lot in the past with airlines. The big thing is business travel. Domestic travel is coming back. It's almost, Delta even reported in their latest quarterly earnings along with United, a lot of the domestic and leisure travel is coming back pretty close to pre-pandemic levels. Not quite, but, give or take 20% or so. The business travel is still down about 50%, but the good news is that that's what's baked in right now. And as you have all these mandates and things lifted and these restrictions lifted, that's the number that's really going to move the mark there. But across the board, it's hard not to be bullish. It's genuinely a great bullish thing for everything to be open, and not only open, but for the fear of a lockdown to be past us now. And I genuinely think that that's the case. I don't think anybody is anticipating a world leader coming out outside of, smaller concentrated areas coming out and saying, hey, we're going back into lockdown. That overall is extremely bullish, and it needs to be, because we got plenty of headwinds, i.e. inflation, to go against. But this couldn't come at a better time, and it's not a coincidence. It's why they're lifting these mandates.
We're done with lockdowns. Johns Hopkins, one of the earliest to cover this. Someone I respect a lot that's not biased at all. And when we were covering it very, very early, we created something on our website, just like a tracker of trying to do states and different things that we're hearing in news flow. And then Johns Hopkins just one-upped us. And this is, I think, in the first week of March, where they said, okay, we're going to cover all of our states. It became the standard every place, like all the states, all the countries, death rates and everything. But just when you look at the statistics, and now that we have all the statistics, which we've known a year ago, but lockdowns are just the worst thing ever, considering, the damage that COVID's done. And now we know who it impacts and everything. And now we're seeing a lot of BS around the mask mandates as well, to the point where even liberal sites are actually questioning it, where, look, we're all wearing masks, and we see in some of these areas where mask wearing and vaccines and everything. I'm not saying that vaccines don't work. I'm vaccinated. I believe in vaccines for people, not for kids at all, since they're pretty much, the fatality rate is 0.008%, which is insane. But, when you're really looking down the line in terms of masks too, that's easing as well, because we've just seen this spread like crazy, no matter if you wear a mask or not. Even places, forget about the U.S. and Israel and some of the most vaccinated places, and some of the heavy restrictions of mask wearing. We're starting to realize like a lot of this stuff is BS, and it's great because now we have even, not only Johns Hopkins come out. I saw someone from Harvard Medical come out, a very famous doctor came out saying how, masks don't really work. If he did that a year ago, they would have fired him, and he would have been, he would have never worked again probably. But now you're seeing a lot more people. Now we're able to actually look at the statistics and look at the data, right? So, which is great. But anyway, whatever side you're on, and it's funny because Axios came out. When Axios, just to let you guys know, Axios is run by two Politico vets, which is the most liberal site in the world. But they said only their latest poll from February 4th to the 7th, Daniel, is a poll of just 1,049 people. 21% of U.S. adults want the country to open up and get back to life as usual with no mandates or requirements. Only 21%. That's based on their poll, which again, it's a liberal site. They probably polled, people who are over 65 with underlying conditions who are liberals, right? So I think that's hilarious because I think that number is more like 75%, if I had to guess, now that we have all the statistics. Either way, guys, real quick, Daniel, before we get to the next topic, should be Facebook here. Guys, airlines, right? So you're looking at everything opening up. You're seeing business travel start to pick up. We're definitely seeing just leisure travel definitely pick up. If you're looking at airlines, their profits are going to hit 2019 levels soon, this year, which is remarkable. Because back then, pre-COVID, when you're looking at Delta, it was $60 a share. You could say, okay, it's $42 now, but forget about that because they issued a lot of shares, right? So it's not, you have to look at valuation. They had a $37 billion market cap back then. Now it's $27 billion. So you're looking at a 55% difference with $27 to $37 billion market cap. United had a market cap back then of $23 billion. Now it's $17 billion. So from 17 to 20, that's 35% upside. Even American had a $25 billion market cap pre-COVID, and now it's $11 billion. So that's taken the actual share count, not just the share price, right? Which is not reflected because they issued more shares. They had to raise money. So you're looking at 125% upside. And, think about it. Profits are going to get back to normal. These guys are going to report blockbuster profits. They have pricing power. Everyone's dying. You can see massive demand even for travel, like Daniel said, on the business front. I think the airlines are a layup here, and also the companies like Expedia, Airbnb, even cruises. They rebounded more than airlines, but still down 30% plus from 2019. But travel's back. Boeing orders, they're going to see their orders explode. They're starting to see that right now. You've seen that. But I think that reopen trade, guys, should focus on, because the next year you're going to see the profits for these companies actually skyrocket. They do have pricing power, and there is demand there. That's where people are spending their money, as they're probably going to cut back on restaurants with prices through the roof. And you're seeing that. Chipotle said that, they beat numbers, but inflation and had to raise prices. And you see that across the board. Not everyone's created equal. Young brands did okay, but some other ones haven't. So I'd be careful with restaurants here, which really bucked the trend and have done very, very well.
Yeah, Chipotle, just real quick, they just reported earnings. They had to be positive for the most part because the stock popped, 5 or 6% today? Now, granted, it's still off its highs. Yeah, I wouldn't buy the industry. I would be very specific on restaurants in general, just like apparel. I've liked Hain Brands for a while because they control a lot of their supply chain. Buckle is a stock that keeps the Buckle or Buckle. Mm-hmm. Buckle, yeah. I think of jeans when I think of that. I know they have a lot more accessories. That continues to come up on a lot of screens that I run, a lot of things that I do, and it's bad on me because I've not really dug into it. But that's what I would be. I would be very specific, and I wouldn't buy the sector.